please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Dreams in the U.S. may soon become reality. Our own CNBC's Ylan Mui with those details.
Already, Ryan has had to scale it back to a temporary provision that lasts only 5 years. And that's just one of the many details of this tax plan that still need to be hashed out among lawmakers. We're not expecting to see an actual tax bill until after the budget process is wrapped up. Today was the first step in getting that process started, but it's looking like there won't be a vote on the final version until early November. And that doesn't leave much time for getting tax reform done this year. I'm Ylan Mui for CNBC Business News, Washington.
And 16 past the hour as we get rolling along and more into the Asian market. So what is the tone today? We've taken that positive lead and are building on it. The Nikkei up 78 and the ASX in Australia also north as well. David Riedl, president and founder of Riedl Research Group, joins us from San Francisco, California. David, good evening to you and thank you very much for joining. So I know you're looking at the greater China markets. It's a good time out to look at the markets. China's closed, of course, all week for a national week of official holidays, but you've been sort of sorting through the market and identifying some possible plays there. Where I am in Hong Kong, this market's completely going nuts lately. The insurance companies, the banks, and one tech company seem to be responsible for a lot of that. Do you think this is sustainable?
I think it is in the near term. I think Beijing's going to be very motivated to make sure that there's market stability and growth and positive news flow in and around the very important mid-October Congress and political meetings. I think in the weeks after that, they'll continue that trend. I think that people need to realize that a second 5-year term for President Xi with a political system with a lot of his supporters in it is going to be very good for a lot of his initiatives, which I think have some opportunities for investors in the coming months and years.
What do you? He spent the first 5 years largely consolidating his power. I mean, he took down a lot of opposition within the ranks. Now that he's ensconced himself so solidly, what do you think is going to happen? I mean, he now turns to reform. He now turns to the economy. You're taking a positive view of that. What's he going to do for the economy that's going to be stock supportive?
Well, a couple of things. One thing, he's made environmental protection a key plank of his platform. So I think you need to look at the industrial players that have larger plants, newer plants, are less polluting, and I think you'll have a lot of the illegal or smaller scale plants in aluminum smelting and in copper and in paper generation and things like that. They'll be closed down to the benefit of larger players like Nine Dragons, for example, which we think will continue to do well. I think you'll see a easing up on the anti-graft focus, so that'll be good for shoppers and visitors coming to Hong Kong, also visitors to Macau. I think that he'll continue some pressure on anti-graft and corruption, but I think he'll loosen up a little bit. And I think most importantly, the Belt Road Initiative is going to be very good for Chinese banks and Chinese construction companies as they spend that $150 billion per year on infrastructure all the way from China to the Middle East. So I think there's a lot of things where investors can find positive news in Xi Jinping's second term.
Right, David. Some of the things that are maybe some of the markets that have been on the receiving end of Xi Jinping's influence include South Korea. I mean, this is a prime travel time right now. This week, the Golden Week during the Mid-Autumn Festival for Chinese tour groups, but because of the deployment of THAAD missile defenses in South Korea as a defense line against the North, the Chinese didn't like that, and they made it hurt to South Korea. They banned tour groups from going to South Korea, and I don't know if you've seen the pictures, but Jeju Island, which is a popular place for Chinese tourists, is almost deserted this time of year. That is scary looking.
It's a big impact on South Korea. It could represent as much as 0.5% reduction in their GDP growth this year because the spending of Chinese tourists is such a big thing in Korea. And not just that. I mean, it's not just the tour impact and the tourism impact. Korean brands are being punished at home. Lotte Shopping has had to close a number of stores. Hyundai and Kia reported that their sales during certain periods of this year were half what they were a year ago. And China is their biggest market. So the impact on Korea is an important one. I think the currency, the market and the outlook for economic growth have not yet reflected that properly.
Right. And there's some talk about tour group restriction to Japan as well. Is this an attempt by Xi Jinping to influence the upcoming election in any way? That's a stretch, isn't it?
I think it is. It's been very localized. It's been certain provinces and cities where tour operators have been asked to dial back their sending of package tours to Japan. So it might be more related to concerns about currency outflows and leakage of currency out of the country. It seems quite localized at this point, maybe not being fully directed from Beijing.
Right. And David, to revisit actual ways to play the market, you talk about environment and clean manufacturing, environmentally friendly, forward-looking companies. What about the financials? In a rising rate environment, supposedly those are going to be the beneficiaries. And, the BOCOMs, the agricultural banks, the China merchants banks, they've been seeing a whirlwind of activity lately. A lot of these, of course, listed in Hong Kong, so benefiting from liquidity here as well. Does that continue, or is it pretty much shutters, game over for those plays?
Oh, I think this all could be very good for domestic securities, which is good for many of the securities and brokerage companies there. I think the cut in reserve ratio requirements for the rural banks and trying to spur more lending to small and medium-sized enterprises, that's very good for the agricultural banks and the more rural non-tier one focused financial institutions around the country. I think the kind of stability and policy focus that comes in the next 5 years with a consolidation of power around Xi Jinping and his policies can be very good for Chinese banks, Chinese stocks, and Chinese brokerages.
Okay. David, thanks for your time. Appreciate it. We'll catch up with you soon. David Riedel, Riedel Research Group, joining us from the Bay Area in California. As we head to break, here's a look at some of the winners and losers in Tokyo today. U.S. trade regulators have handed Whirlpool a key victory against South Korean-made washing machine makers. It ends a long-running fight that drew backing from the White House trade advisor Peter Navarro earlier in the year. He blasted companies like Samsung and LG for, quote, the kind of trade cheating that must be stopped. Let's get details. Hampton Pearson reports from Washington.
International Trade Commission finding that on Thursday, the surging imports of large residential washing machines harmed domestic producers. That's a major step towards the imposition of possibly broad duties or quotas on foreign-made Samsung and LG brand machines. Now, this case, brought by the U.S. applicant giant with the Whirlpool Corporation, was seeking, quote, global safeguard restrictions to stop South Korean rivals Samsung Electronics from flooding the U.S. market with cheaper washers. The U.S. Commission voting 4-0 in favor of a finding that a large number of those imports was hurting domestic manufacturers, and they'll recommend that by December 4th to President Trump, who's expected to make a final decision by early next year. Now, there's also the possibility of a public hearing on possible remedies scheduled for October 19th at the ITC. That's according to a spokesman there. Now, that panel did not find that the washers made specifically in South Korea, already subject to anti-dumping duties, were responsible for harming U.S. manufacturers. Whirlpool chairman Jeff Fettig said the decision was another vindication in his company's years-long anti-dumping battle with Samsung and LG, in which he'd accused them of moving production around the world in order to avoid U.S. duties. Samsung and LG both issued statements saying that those import curbs would hurt consumers by raising prices, limiting choice, and stifling innovation.